All right. Welcome, everyone, to another deep dive,
Yeah, excited for this one.
where we, as always, take a bunch of smart sources,
Ooh, I'm up.
really try to cut through the noise and find the key insights that are going to get you ahead of the game.
Exactly. And today we're tackling the pretty wild market moves we've been seeing.
Yeah, I mean, a lot of volatility, a lot of uncertainty, and we're going to try to make sense of it all. And the way we're going to do that is by looking at four different analysts, economists, kind of a mix.
Yeah, and a really diverse set of perspectives, which I always appreciate. We've got Michael Oliver, who's big on technical analysis. The team over at Eurodollar University, always a macroeconomic deep dive, and then Shan Fu and Yanis Varoufakis bringing in some geopolitical flavor as well.
Yeah, so really a 360-degree view. And all of this is coming from transcripts of YouTube videos. So we've been watching, listening, reading, taking notes.
Tons of notes.
Tons of notes, yeah. And we've pulled out the really the most important stuff for you guys. So let's just jump right in, shall we?
Let's do it.
And let's start with Michael Oliver.
All right, yeah, Oliver. He's been calling for a major shift in the market, for a while now, hasn't he?
He has. He's had his eye on early 2025 as a potential peak for a major stock market bubble.
Oh, wow.
And his reasoning for that, he attributes that to all this easy money we've had. Quantitative easing, QE, crazy low interest rates.
Yeah, it's been a long time coming.
Since the 2009, crisis. And so he sees all this as kind of inflating asset prices, over a long time. And now he's looking at the market and he's seeing this sort of reassessment happening. Investors are starting to think differently.
Yeah. I mean, it definitely feels like sentiment is shifting. But one thing that's always interested me with Oliver is his take on gold during these market downturns. There's that, that common belief that gold always tanks when stocks do.
Yeah, it goes down with the ship. But Oliver, he pushes back on that hard. Yeah. Uses the 2008 crisis as his example, big one, right?
Yeah.
Points out that right at the start, before things got really bad in October of 2008, gold actually went up.
Interesting.
And he says, well, gold, it's kind of like a canary in the coal mine for our monetary system, right? It reflects that constant depreciation of our paper currencies. So it's not always going to move in the same direction as the stock market, at least not right away.
So it's not a simple, one-to-one correlation then?
No, not at all.
Yeah.
He actually says that the dip that we did see in gold in October 2008, that was kind of a correction within its own trend. But the big takeaway is what happened next, right? So the Fed, they come in with QE in November, really flood the system with money.
Right.
And gold, it takes off, big rally, while the stock market keeps tanking for another 5 months.
So gold decoupled from the stock market. Interesting.
Yeah, and that's Oliver's point. He sees the Fed's actions as the main driver for gold. So even if the market keeps sliding, gold could actually be a hedge, which is, kind of counterintuitive to what a lot of people think.
Definitely challenges the conventional wisdom. So where is Oliver's focus now?
Right now, he's worried about the banks.
The banking sector. Yeah, I've seen him talking about that.
Yeah, he's watching the KBE ETF, the one that tracks bank stocks. And he's looking at individual banks, too.
Yeah. Big
names, Bank of America, Citigroup.
Right, some of the big players.
Yeah, and he's noticing that they're falling, way faster than the S&P 500,
Kind of a leading indicator.
Yeah, and for him, this is a huge red flag. This is the kind of thing that makes the Fed panic and step in, more QE, interest rate cuts, whatever it takes.
Well, yeah, the Fed's always been pretty concerned about keeping the banks stable.
Of course.
Yeah.
And Oliver, he goes back to his point about gold being a monetary metal.
Right.
And in his view, when governments and central banks keep printing money, keep interest rates super low, our paper currencies, they lose value, right? It's like death by 1,000 cuts.
The slow bleed.
Yeah, and gold, it just reflects that. It holds its value because, it's not being printed into oblivion.
So that's why he thinks gold's holding up relatively well now, even with all this market turmoil.
Exactly. It's like, a safe haven in a sea of uncertainty.
Makes sense. Now, I know he also had some strong thoughts on silver, right?
Oh, yeah. He's got a bone to pick with how silver's being treated right now. It's taken a big hit lately, price-wise, and he thinks people are treating it like just another industrial metal, like copper or oil.
Interesting.
Yeah, he's like, no, silver is a monetary metal, and he points to the gold-silver ratio, that historical relationship between their prices.
Right.
And right now, it's like 100 to 1.
Wow, that's pretty extreme.
It's super extreme. And Oliver sees that as a huge buying opportunity. He's calling it a slingshot. He thinks once gold starts really moving up, silver's going to catch up, and it's going to be a wild ride.
Like a rubber band snapping back.
Yeah, exactly. And to make his case, he actually gets into some technical analysis looking at these point-and-figure charts.
Yeah, I've seen those. They can get pretty complex.
They can. But basically, he sees a potential bear trap in silver. It's like the price drops to scare everyone off, and then it reverses hard.
So it traps the people betting on it going lower.
Exactly. And he thinks that sets up a triple top breakout. It's a classic chart pattern that often signals a big move upward.
So he's bullish on silver then.
Oh, yeah. He thinks it's got a ton of upside potential. He did also mention commercial real estate is another area he's worried about.
Commercial real estate. Yeah, haven't heard much about that lately.
Yeah, well, he's worried about rising defaults,
Yeah.
And if that happens, it could spell trouble for the banks, which, could trigger the whole Fed intervention scenario he's been talking about.
Domino effect.
Exactly. So big picture, here's what Oliver's expecting. He thinks the stock market is going lower, especially the banks, and that's going to force the Fed to step in, which will be great for gold and silver. And he even thinks the Fed might act sooner this time around, try to preempt a major banking crisis before it blows up.
Interesting. So kind of like a preemptive strike to avoid a repeat of 2008.
Yeah, that's the idea. And, he also touched on that whole physical gold demand thing. People wanted to hold the actual metal, not just paper representation.
Right, the real stuff.
Yeah. And he sees that as a sign of, deep unease about the financial system. People are worried, and they're putting their money where their mouth is, so to speak.
All right, so that's Oliver's view. Now let's switch gears and talk about Eurodollar University. Their analysis, I think they titled it Liquidations Everywhere, right?
Yeah, pretty dramatic title. But their point is we're seeing this massive selling across global markets, not just stocks,
Right, a global phenomenon.
Yeah, and they see Trump's tariffs as the final straw, the thing that broke the camel's back. They're very clear that this isn't just a U.S. problem, it's global.
It's a global economy, after all. Everything's connected.
Exactly. And they're really focused on interest rates. The way they've been falling, it's a big red flag for them. They point to the 10-year Treasury yield. It's below 4% now, the 2 years heading for new lows. And they see that as a clear sign that a recession's coming.
So the bond market is basically sounding the alarm.
Big time. They even talk about this thing called bull steepening of the yield curve. Basically, it means the market thinks the near future is way worse than the long-term future.
Like things are going to get really bad before they get better.
Yeah, classic recession signal. And they point out that this trend, it actually started back in October of last year. So the bond market, it's been hinting at this for a while now.
Wow, so the bond market's been ahead of the curve on this.
Yeah, often is. And speaking of being ahead of the curve, let's talk about those forward rate markets, those term SOFR futures. Those are basically how sophisticated investors hedge against future moves in interest rates.
Right. So what are they telling us?
They're now pricing in a much higher chance that the Fed's going to cut rates sooner than anyone thought.
Which is crazy, right? Because the Fed, they've been saying that tariffs could lead to inflation.
Yeah, that was their whole argument for keeping rates high.
Right, but the market's basically saying, nope, the slowdown from these tariffs is going to outweigh any inflation and the Fed's going to have to cut. It's a huge disconnect between what the Fed's saying and what the market actually believes.
The market's calling the Fed's bluff then.
Yeah, pretty much. And it's not just the bond market. Eurodollar University, they detail all this selling pressure, liquidations, happening across stock markets too. The S&P 500, it's in correction territory now, down more than 10% from its peak. The Philadelphia Semiconductor Index, that's seen as a leading indicator for the economy, and it's been falling since last July. Wow, so weakness across the board.
Yeah, and they point to the NASDAQ, which is below its August lows, and small cap stocks. Those are usually more sensitive to economic swings, and they're tanking too. So they're arguing that all of this points to a classic recession, negative GDP growth, jobs disappearing. Although they do acknowledge that the recent headline jobs numbers were better than expected.
But even with that, they're still convinced a recession is coming.
Yeah, they think the overall picture is still pretty bleak. And then they get into the credit markets, which can sometimes show you stress that's not obvious in the stock market. They talk about these widening credit spreads, especially for riskier corporate debt like those CCC-rated bonds. The spread over safe treasury bonds has blown out to over 1,000 basis points. That's huge.
Yeah, that's not good. What does that indicate?
Basically, it means it's getting harder for companies to borrow money. There's less liquidity, people are nervous, and it could even signal problems in the repo market. That's the short-term lending market where big financial players use treasury bonds as collateral.
Right, kind of the plumbing of the financial system.
Exactly. And if that gets clogged up, it can cause all sorts of problems. Eurodollar University, they also point out that these widening credit spreads are highly correlated with stock market volatility.
So more volatility on the horizon then.
Most likely, yeah. And then on top of all that, we've got the commodity markets. They're seeing big drops and liquidations there too. Oil prices, they're at their lowest since early 2021, which is crazy because it's winter, demand should be higher.
Yeah, that's usually when oil prices spike.
Exactly. And gasoline prices are weak too, which suggests demand soft even before the tariffs really hit. And even copper, which had been doing well because of supply issues, is getting hammered now.
Wow, so even copper's not immune.
Nope. It's all getting sold off. They even specifically mention aluminum being caught up in it.
So it's pretty clear that Eurodollar University, they're painting a very bearish picture here.
Oh, yeah. Their takeaways are pretty stark. Lower interest rates globally, the Fed being forced to cut rates despite what they've been saying, a high chance of a classic recession, and a lot more volatility ahead. Buckle up. Okay, so that's two pretty pessimistic views. Let's see what Shan Fu has to say. He seems to be focusing more on the immediate impact of these tariffs, right?
Yeah, Fu's whole analysis is built around these new tariffs that Trump's imposed and the retaliation that's likely to follow. He's basically calling it a trade war and saying it's going to have immediate negative consequences for the economy.
Right, so he's not mincing words. And he's also concerned about a recession, isn't he?
Big time. He points to J.P. Morgan. They've increased their odds of a U.S. recession in the next year to 60%.
Wow, 60%. That's a significant jump.
Yeah, and they're blaming it on the expected retaliation from other countries, businesses losing confidence, and those supply chain disruptions that everyone's been talking about. He even mentions Besson, who's, I guess you could say, pretty convinced that a collapse is coming. Yeah, Besson doesn't sugarcoat things. And Fu, he's also got some strong opinions on how all of this is affecting the dollar, right?
Yeah, he's basically saying the dollar's getting slammed. It's lost all its gains from after the election, and these new tariffs are making it even worse. He thinks the dollar is losing its safe haven status, even with Treasury yields falling.
Which is unusual, right? Usually when yields fall, the dollar strengthens.
Exactly. But Fu's point is that the global demand for dollars is shrinking. People are losing faith in the U.S. economy, especially with the threat of a trade war.
And a weaker dollar, that's bad news for U.S. consumers, right?
Absolutely. It means higher prices for everything we import, which is a lot. So even if those tariffs make some specific goods more expensive, the weaker dollar is going to make everything else more expensive too.
Ouch, double whammy.
Yeah, it's not a good situation. And Fu, he goes on to talk about how these reciprocal tariffs are calculated. He calls it crazy. Basically, they're based on trade surpluses, which can lead to insanely high tariff rates. He gives the example of China. They could be hit with a 34% tariff on everything they send to the U.S.
Wow, 34%. That's going to make things interesting.
Yeah, and he's expecting that kind of thing to trigger even more retaliation, which is just going to hurt American consumers even more in the long run.
So it's a vicious cycle.
Pretty much. And then he gets into this whole idea of the dollar losing its reserve currency status. You know, how most global trade is done in dollars.
Right, the dollar's the world's reserve currency. It's a big deal.
Huge deal. But Fu says that as the U.S. imports less because of these tariffs, either because people just buy less stuff or they switch to American-made products, the flow of dollars around the world slows down.
Less dollars sloshing around.
Yeah, and if that keeps happening, he thinks the dollar could gradually lose its dominance. And that could have some serious long-term consequences for the U.S. economy. You know, less demand for U.S. assets like Treasury bonds.
So potentially a major shift in the global financial order.
Potentially, yeah. And then Fu gets into something that I think a lot of people are worried about, retirement savings.
Yeah, those 401ks.
Exactly. A lot of people have a big chunk of their retirement savings in the stock market, especially index funds like the S&P 500.
Which has been taking a beating lately.
Yeah, and Fu, he's calling it a bloodbath.
Yeah.
He's worried that people are going to see their retirement accounts shrink, panic, and start cutting back on spending, which would just make the recession worse.
So it's like a negative feedback loop.
Exactly. And then he shifts gears and talks about American companies, specifically the ones that import goods. He thinks they're going to be forced to eat a lot of the cost of these tariffs by offering discounts to consumers.
So try and keep prices down, even if it means lower profits.
Yeah, he points to companies like Stellantis and Ford. They're already offering employee pricing to everyone, which he sees as a sign of weakness. And with those tariffs on Chinese goods going up by 54%, he thinks a lot of companies are going to see their profits squeezed.
54%, that's huge.
Yeah, it's a big hit. And then there's the whole manufacturing renaissance that the Trump administration has been talking about.
Right, bringing jobs back to America?
Yeah, but Fu's not buying it. He says those are just promises, and there's no guarantee those jobs will actually materialize, especially if demand stays weak and other countries retaliate with their own tariffs. Plus, he points out that a lot of the promised investments are coming from tech companies, not traditional manufacturers.
So not really the kind of blue-collar jobs that Trump promised.
Yeah, that's his point. So Fu ends by laying out this dilemma that the Fed's facing. Do they intervene, cut rates, do more QE to try and save the markets and people's retirement accounts? Or do they hold off, knowing that those actions could weaken the dollar even more and create new problems?
It's a tough spot to be in. All right, so we've had Oliver, we've had Eurodollar University, and we've had Shan Fu. Last but not least, let's hear what Yanis Varoufakis has to say. He always brings a unique perspective, kind of a big picture, systemic view.
Yeah, Varoufakis, he's not pulling any punches. He's basically saying Trump is truly upending the monetary system and the entire way global trade works. He even compares it to Nixon taking the U.S. off the gold standard back in '71, which he says was even more disruptive.
Wow, that's a big statement. So he sees this as a truly historic moment.
Yeah, he's basically saying we're witnessing the end of an era, and it's not going to be pretty. He calls Nixon's actions a controlled disintegration of the world economy and points out the irony of how the same people who are freaking out now about Trump actually helped create the system that Trump's tearing down.
Interesting. So where does he see this all going?
He thinks the Trump shock, as he calls it, can split the world in two. Some countries will side with Trump, while others, like the BRICS nations, will go their own way.
A kind of economic and geopolitical realignment.
Exactly. And he says the big question is, how will everyone else react? Will the EU and China team up? Or will it be a free-for-all, with everyone fighting over scraps? He does mention that China's been cozying up to Japan and South Korea lately, which could be significant.
Yeah, that's an interesting development. What about those countries that are trying to cut deals with Trump early on? Does he think that's a good strategy?
He's not so sure. He describes Trump's approach as dealing with each country individually, like the spokes of a wheel, with Trump at the center. And he thinks the order doesn't really matter. Trump's goals are the same, no matter who he makes a deal with first.
So no one's getting special treatment?
Nope. And then he gets into this contradiction in the Trump administration's goals. On the one hand, they want a weaker dollar to boost exports. But on the other hand, they want to keep the dollar's exorbitant privilege as the world's reserve currency.
Right, because that gives the U.S. a lot of power.
Exactly. And Varoufakis doesn't think they can have it both ways.
So something's got to give. Now, what's his overall take on whether Trump's going to achieve his goals with these tariffs?
He thinks some of them, like getting more foreign investment and shrinking the trade deficit, will probably happen to some extent. But he warns that it's going to come at a high price.
Especially for the American working class, it seems like.
Yeah, he's worried that all this capital flowing in won't create enough good jobs, and the tax cuts are going to mostly benefit the wealthy, which will just make inequality worse.
Yeah.
He's also a big advocate for strong social safety nets, like Social Security and food stamps, especially in times like these.
A bit of a safety net for those who might get left behind.
Exactly. And he had some interesting thoughts on how Trump announced these tariffs.
Yeah, the whole White House thing.
He called it brilliant, grotesque propaganda, designed to appeal to Trump's base, not the elites. He even pointed out how low-tech the presentation was, which he thinks was intentional, to make it feel more relatable to ordinary people.
So a deliberate strategy to connect with his supporters?
Yeah, absolutely. And finally, he talks about what he thinks is missing from the discussion, especially in Europe. He says there's no real self-reflection about the end of the U.S.-dominated global order, the one that Nixon created, and Trump is now dismantling.
Interesting. So he thinks Europe needs to wake up and realize the world is changing.
Yeah, he's basically saying, hey, the old system is gone, you need to adapt. And he criticizes the focus on retaliation instead of addressing deeper economic problems and investing in the future.
So he's calling for a more proactive, forward-looking approach.
Exactly.
Wow, so we've covered a lot of ground here. 4 very different perspectives on this whole market meltdown and trade war situation.
Yeah, and it's amazing how much they actually overlap, even though they're coming from different angles. It's clear that the global economy is in a precarious position, and these tariffs are adding fuel to the fire.
And there's that recurring theme of the Fed possibly stepping in, trying to save the day. Oliver is worried about the banks. Eurodollar University is seeing signs of stress throughout the financial system. And Fu's analysis suggests the economy could be headed for a real rough patch.
Yeah, and then Varoufakis comes in with this big picture view talking about a potential shift in the global order. It's a lot to digest, and it really makes you think, where do we go from here? What does all this mean for our own financial well-being?
Big questions, no easy answers.
Exactly, and that's why we do these deep dives, right? To try and make sense of it all, to give you guys the information you need to make informed decisions.
Exactly. And I think this deep dive has given us a lot to think about.
It has, and as we always do, we want to leave you with something to ponder, something to maybe research further. We've heard these warnings from Oliver about the banking sector. Are you keeping an eye on those bank ETF? What about bond yields? Those are often a good indicator of where the economy's headed.
And we can't forget about commodities, oil, gold, silver. They're all telling us a story about the global economy and investor sentiment.
Right, and then there's the big question of how all this is going to play out globally. Are we headed for a more fragmented world, like Varoufakis suggests? What are the different countries doing to adapt? These are all things worth paying attention to.
It's a lot to process, but it's essential information for anyone who wants to understand where the world is headed.
Absolutely. So stay informed, stay curious, and keep those questions coming. We'll do our best to keep you ahead of the curve. Until next time.
See you then.